The Bank of England has raised interest rates from 1.75% to 2.25%. That takes the key borrowing cost to the highest level since 2008. The Monetary Policy Committee at the Bank of England voted 5-4 in favour of the change. And the bank has also forecast that the UK economy is already in recession. Well, for more on this, I'm joined now by Danny Hewson, financial analyst at AJ Bell. Danny, thanks for being with us. Any surprise?
That someone was talking to me in my ear. Could you repeat the question, please?
Any surprise in that move from the Bank of England, Danny?
There was a surprise. Certainly it caught markets on the hop because up to the point where we had the announcement, 70% of markets were expecting a 0.75 of a basis point increase along the same lines that, of course, we saw from the US Federal Reserve last night. So there was some surprise that the fact that the Bank of England had only decided to raise rates by 0.5 percentage point, the same way that they did the previous month. But I think when you then dug behind the scenes a little bit, when you got more detail from the Bank of England, the fact that they believe that the UK economy is already in recession, not going into recession later this year as they had previously predicted, but is already in recession, you can understand why they have been slightly more timid in their approach.
And what might that mean, Danny, for the pound?
There are lots of people who think that the Bank of England hasn't been aggressive enough. Although it was the first major central bank to raise rates following the pandemic, it's taken a very slow, softly approach, with most of the 7 increases that we've seen so far this year only coming in at 0.25%. And because of that, we've seen the pound take an absolute hammering against other currencies, particularly the dollar. Now, the dollar, of course, is gaining ground because it is seen by many people, many investors, as a safe haven currency. But there are also big concerns about exactly how strong the Bank of England has been in terms of bringing down inflation, and also now with this economic impact assessment of how the UK economy is looking and the fact that it's not looking particularly great at all. This is going to just increase the jitters being felt in markets.
And Danny, given the impact that we're seeing on energy prices and therefore feeding through into inflation from the war in Ukraine, are we clear yet that raising interest rates is going to have the intended effect on inflation?
You know, I've been contacted by so many people on social media today saying surely inflation is being created by things like the situation in Ukraine and supply issues, which were, a headache of what happened during COVID. The issue is that those price rises are here and they're becoming entrenched in the UK, which is meaning that employers are having to pass those additional prices onto the consumer, and employees are asking for higher wages. So we've seen a whole load of wage agreements which are nowhere near inflation, but certainly higher than those pay deals would have been without inflation being at the point that it currently is. By making it more difficult to borrow money, by tightening things up, it means that people will spend less. It means that companies will think twice about giving those extra pay increases. And hopefully it will mean that inflation doesn't get sticky, it doesn't stay around, it doesn't become stagflation. We've also got the situation here in the UK, of course, where the government has stepped in and given assistance to both businesses and the consumers with their energy bills. And because of that intervention, it is expected that inflation won't peak anywhere near as high as it was expected to, and it will peak a lot earlier at around 11% next month. But with all that additional fiscal stimulus in, there is concern that potentially it does mean that inflation, though it won't hit those highs we were expecting, it will stick around certainly through most of next year.
Thank you, Danny. That's Danny Hewson, financial analyst at AJ Bell.
WION is now available in your country. Download the app now and get all the news on the move.